Welcome to video 6-1, where I go over the beginning of Chapter 6. So Chapter 6 is about process costing, and there are generally 3 steps that I go over and 2 different methods for process costing. There's calculating total equivalent units, or TEU, in both the weighted average and FIFO methods. That's the first step. Second step is cost rates per equivalent unit. Now that you have total equivalent units, you can put this TEU in the denominator and calculate cost rates. And we have that in 2 different methods as well, slight differences between the 2 of them. And then we have applying the costs and getting total costs for units completed and transferred out and for ending work in process. And some slight differences in these 2 methods for that too. And so what I'm going to do is go over just calculating total equivalent units as well as teeing up the general idea of process costing, giving you a theoretical background for it in this first video. And then in 6-2, I'll dive into what you do for the rest of the process costing cycle in weighted average, and then in 6-3 we'll do the same now for FIFO, going through rates and applying the costs for FIFO. So process costing can be tricky for some students, and there are a lot of steps to it. Often each step in isolation doesn't give students problems. It's when they have to stack all the steps together and remember all the individual rules that they can give themselves trouble. So I want to go through it slowly. I want to go through each major step. I showed the 3 steps just a second ago. And I want to make sure that we understand how it relates to the other types of costing you can do for inventory. So it actually is an idea that we mentioned, if you were reading along on the textbook, back in Chapter 4. We have our absorption of overhead, and right here we have some direct costs that we can already trace to the products, but there's overhead floating around in the ether, in the atmosphere around the products, in the factory literally, costs that are being exerted, that are being expended for the sake of those product units, but we can't really economically trace them to the product units, and so we have to find some reason to some rationale for absorbing those costs into the product units. And the simplest way to do that would simply be to average them, to just say, hey, we're going to take the overhead costs and divide them by the number of units we have, and then that's how much overhead cost each unit gets. And that is more or less what process costing does. We're going to take the average, and it doesn't stop there. We have some complications and some things that logically flow out of that go beyond just overhead costs, but that really is where we're starting and stopping. The idea that we need to find just average overhead costs for each unit in the process. And if you remember from job order costing, the reason why we didn't do that in job order costing is we said, hey, this job over here is different from that job over there, and this order over here is different from that order over there. And if the overhead costs and their differences correlate to some cost driver that we can trace to individual product units, let's just piggyback our overhead costs onto that cost driver, and that will allow us to find some increased accuracy for our customized products. I have my fun little animation here. Feel free to stare at that as long as you like. Maybe if you're having some trouble getting sleep, trying to count how many times the gears turn. So I think it's useful to think about job order costing and why we wouldn't average costs for job order costing to understand why we would average costs here in process costing. In job order costing, each job or order is unique enough that it is informationally beneficial. We gain profitable information from tracing overhead costs using a cost driver. And in activity-based costing, the differences are such that we should use multiple cost drivers. In process costing, therefore, if it's going to be the opposite, then we would assume that these jobs and orders are not customizable. In fact, it's not inaccurate to think of it as a good costing match with mass manufacturing environments. The idea being you have individual product units and they are all identical. They're homogeneous. And so, therefore, if one of them lives or dies, it doesn't really matter to you as long as the big machine keeps working, the process. And so this is how you get the name. You're taking the focus away from the individual product unit towards the process that is churning out these individual product units. There's a dialectical materialism joke in here somewhere with process costing, but then again, where isn't dialectical materialism a joke? And actually, let me go on a little side thought here. Maybe we could even call it a rant. But I think it's helpful to understand process costing and the mentality behind it, and maybe contrast it and ground it in some bigger themes and philosophies here. So process costing only works for firms that produce these interchangeable and homogeneous products, and all individual products have to look and act the same. You would never name them. There's no individual identity at all because they're all about the same. Hence the focus on the process, like I said, rather than the individual product units being created by that process. And so this is why process costing is simply not compatible with customized or individual product units. Not if you want your accounting data to be meaningful anyway. And hence my joke about dialectical materialism and comparing process costing and the process costing mindset with the 20th century stain that is communism, and being that the latter effectively tries to apply a process costing thinking to government. So human beings are customized and individual. We don't look and act the same. We have agency. A process costing like technocratic mindset is fundamentally inappropriate for governing us. I mean, think about it. Do you want the car that you drive to be picked for you based on average data for your gender, race, and age? How about your living quarters? What if all roommates and housemates during your life are picked for you based on some average data? Could there ever be any problems with that setup? Whereas those are very, very much the things you would do if you were a cog in this giant machine and you had process costing like thinking. You're just one homogeneous product and going along the line, and who cares what your individual characteristics are? You're just going to have things picked for you and averages applied to you. Also, we have healthcare. Would you rather your healthcare be picked for you based solely on average health needs in your demographic category? I imagine, anyway, that you would prefer for a real-life doctor to real-life see you and real-life analyze your personal health situation and personal data and personal test results. That setup would probably be especially important if you have a difficult or unique medical condition. And this is a key conceit of centrally planned economies and programs, or in the case of this analogy, of centrally planned mass manufacturing with a process costing mindset. Central planning strips its products and or citizens, in the analogy, of individual agency and assumes they are just meat cogs in a giant machine, a giant faceless, heartless, bureaucratic process. This emphasizes, of course, group identity over individual responsibility, which is in and of itself a corrosive idea. Now, that doesn't mean that process costing is never useful. I just want to contrast it with individualized products, in which people are definitely in the latter category based on the analogy here. If the product you're talking about does lack agency, it is homogeneous, it is interchangeable, and you really would never go through and name, say, each pill along the assembly line or each marble along the assembly line, then process costing is actually much more appropriate than trying to trace cost drivers and using some sort of job order costing or activity-based costing mindset. All right, and so let's move into the complications that we have with process costing. This is what we would assume based on our setup for this. We're taking total overhead costs, dividing it by total units, and getting overhead costs per unit. That's basically what I said process costing was back in Chapter 4. I noticed we don't have to have predetermined overhead rates because we're not going to be applying these costs. We can just take actual overhead costs. They're after the fact. These rates, this overhead cost per unit is after the fact. We have actual overhead costs and actual units. At least we can. Now, I have an important note here. Please don't think because you see this equation in the textbook, therefore you should use it. Obviously not. I'm using it for didactic purposes. I'm trying to show you this is where we start from, and then we're going to add some features to the equation to factor in how process costing actually works. So the first complication is we have units in ending work in process inventory. If there are some units that aren't the same as others, it's units that aren't done all the way. So in many process costing systems, we have to account for these. Sometimes they don't. Sometimes the process costing system says, we don't have enough inventory in ending WIP typically, WIP meaning work in process, and so we can just ignore these or assume they're completely finished and not make any special exception for them. But most process costing systems that want any real definition or have, in a mass manufacturing environment, often you're not talking about a very lean enterprise here, and you have a lot of inventory, and you need to know the value of that inventory in ending work in process. So you get this idea of equivalent units that you have to use. And the basic, let's go back to what we're saying. Units are homogeneous, they're interchangeable, and if we have half a marble here and half a marble there, the process is going to be consistent once the next period starts. those 2 half marbles are going to be completed, and they need half a marble's worth of work for the first one and half a marble's worth of work for the second one. And so we really could just assume that we can mash them together and say, well, we have 2 half marbles done, or 2 marbles halfway done. And so we'll call that the equivalent of 1 marble complete. So we take the percentages of completion, the percent completion, and we multiply that by the product units in that category, in ending work in process specifically. That's what I mean by in that category. So this is one thing I want to make sure you know. The problems that you'll get and the situations you have in real life when you're doing this, oftentimes the percent completion is given to you. I'll give you the problem, hey, the percent completion is this, or I'll give you some way to derive the percent completion based on some sort of a description of the process. And in practice, the people on the floor will probably be estimating at the end of the period some sort of percent completion of the units in ending WIP, or they might have some sort of procedure. You know what, if it's past XYZ point in the assembly line, we just assume it's about 50% complete, and you'll have some percent completion. And then you're just going to multiply the product units and say, well, again, they're interchangeable, they're not individualized, they're not going to undergo dramatically different processes of customization and unique costs and overhead that we have to trace to them. And so therefore, we're just going to mash them together and assume that we can Frankenstein 2 half-done units into the effectively 1 unit, or 3 1/3 of the way done units into 1 whole unit. So you multiply product units by percent completion to get equivalent units. So we have equivalent unit equals the unit times percent completion. And if we put an S on each of these, we could have equivalent units in ending WIP equals the number of physical units in ending WIP times the percent completion of those units. This is not a terribly crazy idea, but it's most of the things in your life that you're used to thinking about. I think this is one sticking point. It's the reason why I go through the time of doing that analogy about dialectical materialism and whatnot earlier. Is I think most things in your life, actually, you do operate on an individualized and customized basis. You direct your attention on things that need attention, that are out of order, that are unusual. The things that are usual, actually, you don't see them. If you've ever seen the gorilla video where you have to just Google YouTube gorilla video and have fun with that if you've never seen it before. I assume you have, but you focus your attention on one area, and anything that isn't a locus of attention for you really kind of fades into the background. Process costing is trying to calculate the background. And so I think just in life, you tend to have a little bit less experience with this idea. So sometimes people have some difficulty with this concept. Now, again, the calculation again is pretty simple. We have some estimate of percent completion for our ending WIP. We know the number of units that we've estimated. So we have 50 marbles, and they're 25% complete. And so the equivalent units that we have in ending WIP then would be 50 times 0.25 or 12.5. So we have 12.5 equivalent units in ending WIP. Now, to get total equivalent units, we have 2 different equations we'll use. Right here, I just introduced the idea of the weighted average equation. We have completed units. We completed so many units during the period. And then we have our ending WIP equivalent units. The brackets here encapsulate the idea of the ending WIP equivalent units. I just have ending WIP physical units times ending WIP percent completion. So I just have this little equation right here embedded right here to get the ending WIP equivalent units. So our total equivalent units for the period that we worked on, because we're going to need to apply costs to all the units that we did work on, are units that got completed, which, the equivalent units for them, we have, say, 100 units we completed during the period. They're 100% complete, so equivalent units equals 100. We still are using equivalent units for those, but this is the same as the physical units that they represent. I actually don't get into the idea of normal or abnormal scrap in the textbook, but that is one area that you might see an additional complication. But we'll assume that we have all the units complete, that we have physical units that got completed, and they're 100% complete. So the number of units that were completed is equal to the equivalent units that were completed. And then we have to calculate the equivalent units in ending work in process. Okay, so now, okay, well, we can't have our units that we had up here because we have to factor in the fact that we did some work on units that were never completed. ended up in ending work in process. So we're going to use this equivalent units idea to apply our overhead. Okay, so now the equation changes. We have total overhead cost divided by total equivalent units. If we're going to average them, we should average over equivalent units because those are the total number of units that we did work on. And so we should apply the overhead cost to all of them. Again, some companies ignore this. They don't worry about ending WIP. They either assume they're 100% complete or 0% complete just by rule, and they simplify their calculations. And depending on the level of work in process inventory you have at the end of the period, you might not lose much information value from that. But we're going to go with the harder case in which you do care about ending work in process being equivalentized. And so now we have overhead cost per equivalent unit. Okay, we've made it a little more complicated, but we have another complication heading up. We have non-uniform consumption of product costs. So again, we have, I just did push the back arrow to chapter 4. We have this idea of product costs. And if we have homogeneous and interchangeable units, technically we could trace direct materials and direct labor to them. That's the definition of this. But why would we? Honestly, if they're marbles and they're all the same and they're all going to take the same amount of glass and paint and labor, whatever kind of labor you do to create mass-produced marbles, then why would we trace individual materials and labor to each product? So what we're going to do is we're going to just say all product costs, not just overhead. We have all product costs that we're going to be applying based on the average. So nothing in process costing typically is traced to individual product units, not direct materials, not direct labor, and of course not overhead, because you never trace overhead directly to product units. You always are applying it somehow. That's the definition of overhead. Overhead by definition can't be traced to individual product units. It'd be such a conundrum that I think the universe would explode if you had overhead that could be traced to individual product units. Okay, so now we've changed it. We have total product cost over total equivalent units. We used to have just overhead costs, but now, we're just going to treat all product costs like this. Just let's average them all and apply them to the units that come across the assembly line. And so now we have this rate of product cost per equivalent unit now. The problem with this is why this complication is called non-uniform consumption of product costs, is that typically, and this isn't always the case, but it happens so often that it has become the norm to teach process costing this way. Typically, you have different percent completions for two different types of product costs, and they might not be the ones you expect. So it's not like you have a percent completion for your direct costs and a percent completion for overhead. Actually, what usually happens is you have a percent completion for materials and then a percent completion for overhead and direct labor combined, which are called conversion costs. When they're together, they're conversion costs. That terminology helps paint a picture. We have some raw materials that come in at the beginning of the process. We apply something to them. We do some work with direct labor. We have some machinery or some process that we have in the factory that often entails overhead costs, and that converts it from a raw material into a finished good. So we have our materials and conversion costs. And usually the way process costing is taught is to say you're probably going to have a different percent completion for your materials than compared to your conversion costs. They often are operating on very different percents completion. And the classic example of this is when direct materials are all applied at the very beginning of the process. So let me tell you a little story. I do this activity when I teach this in person. I say we're going to create a paper airplane company. We are going to produce paper airplanes, and they're going to be they're not individualized or customized. No, we don't have orders coming in. I want a paper airplane that looks like this. No, we're just going to create paper airplanes. The consumer doesn't care what they're like individually. And so what I have is I give the students a timer, and I say I give them some paper or have them grab some paper, and I say, okay, we're going to fold paper airplanes. And I want you to do as many as you can during the period. And that we do it, 30 seconds, a minute. If I'm feeling really cruel, I have them fold paper airplanes for 5 minutes. And we have a nurse on staff for all the paper cuts, just in case, just to be safe. And, okay, we do that. And at the end of the period, I say, let's count them up. Okay, stop what you're doing. You guys, if you're in the middle of folding one, stop it. Okay, count them up. We say how many got completed. So we have our units completed. We say how many are partially completed. And so we have now our ending WIP, partially completed. And then, together we come up as a class with an estimate of what percent complete in general, on average, the ending work in process paper airplanes are. let's say, for sake of argument, 50% complete. Then I ask the critical question. I say, well, are they 50% complete overall, or are they 50% complete just with respect to conversion costs? What is the material in a paper airplane? Paper. How many of these paper airplanes have 100% of the material that they're going to have? All of them. They all have their material applied at the very beginning when you pull the material out and start folding it. What's 50% complete is your conversion of it from a flat piece of paper into a paper airplane. And so you have two different percent completes. You have 100% complete with respect to direct materials. You have 50% complete with respect to conversion costs. So very, very often you have non-uniform consumption is often what's called, but non-uniform percent completion. You have direct materials that are complete to a certain period, a certain level, and then conversion costs that are complete to a different percent. Yeah, so that's the traditional example of when, and it's very common. That's what perhaps one of the main drivers of doing this way of separating out materials and conversion costs is because very often materials are added at the very beginning of the process. They don't have to be. They might be added, for example, here's an example I give, at the middle, at 50% complete. In fact, I have some problems that I give students that have the assumption be you add direct materials at 50% complete. And you think, why would you ever do that? Well, right here, let's say you're cooking some dumplings. What are your labor and overhead, your conversion costs? Well, the gas for the stove, the wear and tear on the stove, so it's an equipment cost, and the labor of the cook. However, the cook is going to get the pots as well, so you have wear and tear on cooking supplies in the kitchen there, the pot as well. You have the laborer, the chef, get the pot, fill it with water, and boil the water before you add any dumplings. The dumplings are the direct materials in this case. And you're going to have half the process done before you add any dumplings. And of course, the critical step is not to watch the pot as you boil it. So we have a few different ways that you can rationalize this, and in my problems and in practice, this will be given to you as the accountant, or once in a while, you will do some sort of a study to try and determine at which point you add direct materials, or if they're just added ratably along with conversion costs, in which case you don't need two numbers. You have just one number for all product costs, and that's total product costs per equivalent unit. But typically we end up with two rates, actually: direct materials cost per equivalent unit and conversion cost per equivalent unit. You need this because, for example, in my paper airplane example, your direct material cost per equivalent unit, when you eventually apply it to that inventory of paper airplanes that we had at the end of the period that were half done, you actually need to make sure you multiply a full direct material cost to each of those units because they're 100% complete with respect to direct materials. And you need to make sure that you apply the appropriate conversion cost per equivalent unit here because they're only 50% complete with respect to conversion costs. So you got to keep them separate so that you can properly apply the costs later. All right, the third complication is that you have transfers between departments. Process costing usually involves processes, multiple processes. You're often trading between several WIP accounts, of which reflects several departments that you're trading between. So I gave you the example, 3 different departments: mixing, assembly, and packaging, and you'll have 3 different WIP accounts, or more in the system, but just grouping wise, we can group them into three WIP accounts: mixing, WIP assembly, and WIP packaging. I say more because, in the modern ERP, these things are ridiculously subdivided. So you actually have WIP mixing with cost center 256451, with project 456AB25. And so that's a special designation, a subdivided designation there in the relational table of its database. But for our purposes, we'll simply say everything that has this identifier is WIP mixing. Everything that has this identifier is WIP assembly. Everything that has this identifier is WIP packaging, regardless of what kind of subdividing the system also does within those WIP accounts. So we are focusing on the process at the department level. That's where we make the distinction. Once again, this is why it gets its name. We're taking the zoom out of, we're not accumulating costs at the job level or the order level. We're accumulating costs at the process level, which generally, not always, but generally tracks along with departments. If a process is individualized enough, that it's worth calling a separate process, typically you have some sort of managerial structure, typically a department or a team or something like that, that oversees that process and has specialized core competencies related to that process. Okay, so the idea is that you have, each time a unit gets completed by your department, it actually moves, you have its costs credited to your WIP account and then debited to the next WIP account. So when mixing gets done with some unit, it credits its WIP account, the cost of those units, and that gets debited over here to work in process. So this third complication is dealing with that. If you're the first in the chain, you don't have to deal with that. But if you're later on in the chain, you have to deal with transferred in costs. It's best to think of these as a type of direct material cost. The cost of getting the work of the prior department, it's like you're buying from them. Even if you don't literally as a company have a transfer pricing policy, that's what you're doing in effect, is this later department is kind of buying the mixed up, the properly mixed input from this earlier department. And it's not like assembly is going to unmix it, so that direct material that it's buying is 100% complete. So typically it actually ends up being a little easier when you have these transferred in costs. Treat them like a direct material that's being 100% complete added to your department. But anyway, the point is that long and the short of it is you get this third rate that you have to figure out. It's transferred in costs that you have and multiplied by total, or excuse me, divided by total equivalent units with respect to transferred in costs gives you transferred in cost per equivalent unit. So let me go review real quick here. We have the basic idea. Okay, we're just averaging overhead costs. No big deal. It's a gateway drug. Because then we have to deal with equivalent units. Okay, now it gets a little more complicated, but I think we can handle the idea of, you might have some ending WIP units and they're a certain percent complete, and so you're just going to ratably multiply them by the percent complete. So now you have equivalent units, overhead costs by equivalent units. You know what? If we're really doing this, this averaging of overhead costs, then why not average all the product costs? Because if it's not useful to trace a cost driver to individual product units, why should we trace anything? Why is it going to be economically favorable to trace direct materials or direct labor? So typically process costing firms are also taking all product costs. And when you start doing that, you start to have to deal with the fact that direct materials often are added at a different rate compared to conversion costs. And so you have to split up those two. You have to get two rates now instead of just one rate for all product costs. Split that up into two. Direct materials costs and conversion costs. And then instead of this being all direct materials, this really is only applying to direct materials that you add in your department, because we have a third category of transferred in costs for direct materials that you got from a prior department in the chain. So between this rate and this rate and this rate, we're expressing in total this right here. We keep them separate though, because we're going to have to multiply them by different equivalent units, because they're at different rates of completion, different percents completion. Okay, so in my section putting all together, I have a little overview of the idea. I'll let you look at that fun little idea. I want to jump to this real quick. Just show you. There are the three rates. Okay, these are equations you should use. So we have our total costs in the numerator. We have total equivalent units in the denominator. Total costs, total equivalent units, total cost, total equivalent units. Now, we're going to focus in this video on just getting total equivalent units, because that's the denominator. Before we get any rates, before we can apply those rates to figure out the dollars in that are being credited over here and that are in ending inventory, before we figure out any of those dollars and any of the rates, we've got to have the denominator here and be able to calculate total equivalent units. Total meaning a total of the units that we've done work on this period. Let's go way back up. The weighted average way of doing this is to say we have our completed units plus the equivalent units in ending WIP, which is equivalent EWIP in units, just physical units you might call it, times the percent completion of ending WIP. That's the weighted average method of doing it. So let's look at these diagrams that I have. So here we go. The tale of two methods, I call it. So in weighted average, you're going to take your beginning WIP costs and divide them up into ending WIP and into completed and transferred out. you don't really care if these beginning WIP costs some of them end up in ending WIP again. Thus it's a weighted average. And so if you have, let's say for example, these beginning WIP costs that you have because you did process costing last period, and so you came up with a certain number for ending WIP, that becomes your beginning WIP cost number here. Okay, let's say it reflected a really, really good month. You had really low costs for how much you produced. Well, with weighted average, that's going to affect, at least peripherally, your ending WIP numbers for this period. And therefore, that's going to become your beginning WIP numbers for next period. So having a good month last month will affect this month's numbers and the month after. Likewise, if you had a bad month last month, if this is, let's say this number is really high. Oh wow, we had an explosion at the factory, and so we have all these sorts of costs for how much work we did. Well, that's gonna drag this down too, or make it more costly too. And the next month, it'll make that a little more costly too. So the weighted average kind of blends your productivity across months. It makes high productivity transfer to future months and periods, and makes bad productivity transfer to future months and periods. And so weighted average is a little more appropriate if you're going to have pretty constant productivity across periods. If you have big changes in your productivity from month to month, you would probably prefer to do FIFO. And that says, hey, these beginning WIP numbers, these have to be finished. These are the first ones, first in, first out. These are the costs represented by the units represented by this cost. Those are the first units that are getting completed. And so they have to go. They have a special highway, like a little HOV lane. If you're in an area that has those carpool lanes, it's a special lane that it goes directly to units completed. It's the first units completed. And then only from current period costs do we say, well, some of those costs go to units completed and transferred out, and some of those costs go to ending WIP. And so then you don't have a carryover. These beginning WIP costs will never move into ending WIP, and therefore affect the next period. Now, that was a big aside about how these two flow. Total equivalent units reflects this. So with total equivalent units, we're going to take, under the weighted average method, we're going to include beginning WIP in the denominator. And we already did. This is me restating what was above. I already had this equation stated above. We have total equivalent units be all completed units, including the ones we started last period. So note the beginning WIP is included in here. The beginning WIP units are here, as well as the one that we started and completed this period. And then ending WIP units are converted into ending WIP equivalent units inside these brackets right here. So we have our weighted average total equivalent units equation. It is generally a little more simple than the FIFO method in its total equivalent units calculation. So let's say we have an example here. We have 100 units in beginning WIP that are 50% complete with respect to conversion costs. Also here, I assume that our materials are added at the beginning of the process. So these 100 units are 50% complete with respect to conversion costs, but they are 100% complete with respect to direct materials costs. So they are 100 paper airplanes that we took paper out of the bag and we put it on the assembly line. As soon as we've done that, we've added 100% of the direct materials that we're going to have. Okay, so we started 1,000 units this period. We have, in my little units T account, I create a unit T account. That's the way I like to do this. We have 100 beginning WIP units, 50% complete with respect to conversion costs, 1,000 units that we started this period, and we know when we counted up the physical units at the end of the period that we had 200 of them, and we estimated they were 40% complete with respect to conversion costs. That 40% figure comes from right here. And so we can figure out, based on our understanding of T accounts, we're experts at T accounts at this point, and I'm making this just based on units, a unit T account. 100 plus 1,000, we should have 1,100 that we're talking about right here, and 200 of those are accounted for in ending WIP. Therefore, we must have 900 units that we completed. And so our total equivalent units can use our units completed, this 900, plus our ending WIP, multiplied by the percent complete for each category. So direct materials, all materials are at the beginning, so it's 100% complete, just times 1. Their ending WIP is 40% complete with respect to conversion costs. That's right here. And so it's 200 times 0.4, which ends up being, this whole term here ends up being 80. And then transferred in costs, just like direct materials are added all at the beginning of the process. So it's 200 times 100%, or 1. All right, so we have 3 different equivalent units. Total equivalent units, excuse me. 3 different total equivalent units that are going to form the denominator for our rates later. That's how we would do it in weighted average. Notice, again, our embedded in this 900 number is the 100 of beginning WIP units. Some of those are almost certainly in here, but we're including them in the denominator. We're going to include them in our rates for this period's costs, regardless of the fact that some of the work was done last period. We are divorcing our beginning WIP units from any costs that were associated with them, and those costs are going to go back into the mix of overall costs for this period. And so we include the beginning WIP units in our total equivalent units in the denominator, and then in weighted average we're going to also include the beginning WIP costs in the numerator. In the next video we'll see that. But if we're in FIFO, like I said, the difference between weighted average and FIFO is strictly about how they treat those beginning WIP units and the beginning WIP costs. That really is the core difference, and that's how it plays out. Here is the equation for FIFO, for total equivalent units. This is the denominator for each of the rates that we calculate in process costing. We have completed units, yes, and ending WIP equivalent units right here. But we're actually going to back out the beginning WIP units, the equivalent units that represent work done last period. And so real quick, we have 100 units here that are 50% done with respect to conversion costs. So half of the work was done last period for these 100 units. And so under FIFO, we would say, you know what, we're gonna take the costs of those beginning WIP units and we're going to move them directly to units completed at the end of this period. And so we shouldn't include the equivalent units that represent that cost in our denominator for the rate, because we're not going to include those costs in the rate for this period's work. So we actually back those out. And you can rearrange the equation to have this completed units and the beginning WIP unit equivalent unit back out right next to each other. So you can have them right here. So we have completed units less the beginning WIP equivalent units, plus the typical ending WIP equivalent units. So this is the only change. We really are just taking and backing out the beginning WIP equivalent units, because we know that those costs are not going to go into here in FIFO. Those beginning WIP costs have a highway directly over to the credit side of the equation at the end of the period. And so when we're going to use the rate eventually to do all of the orange arrows. The rate that we are going to calculate with the total equivalent units in the denominator helps us do the orange arrow applications. So we don't need to include the equivalent units that represent this cost in that rate. So we're going to back it out from the denominator of the rate. And so, yeah, here we go. So here we have the same example, I believe, with 100 units in the beginning WIP, 50% complete with respect to conversion costs, 1,000 units that we started this period, 200 units in ending WIP. They are 40% complete with respect to conversion costs, and all materials, including transferred in materials, are added at the very beginning of the process. And we are the second department of the chain. Thus we have transferred in materials. Now, we know from our unit T account here that we find the plug here, and it's obviously 900. So we still have that 900 completed units. It has to have 900 completed units to make the T account balance. And so we have 900 plus our ending WIP numbers still right here, just like in the previous equations. But now we're backing out the beginning WIP equivalent units. So for direct materials, we had the equivalent of 100% complete units. We had 100 equivalent units in beginning WIP with respect to direct materials. So we want to back all 100 units of those out of our rate, because we don't need to factor those in. Those 100 units worth of cost for direct materials are going to end up in units completed at the end of this period under FIFO. So we just don't need to worry about it. We're going to back it out of our denominator when we calculate total equivalent units. And so we end up with, instead of 1,100 like we had up here, we end up with 1,000 for direct materials total equivalent units. For conversion costs, we have the same beginning that we had for weighted average, and then we back out the 100 physical units we have in beginning WIP times their 50% complete with respect to conversion costs. So we're going to back out 50 equivalent units to account for the 50 equivalent units worth of work that we did last period, and that cost from last period has a highway to the credit side of the WIP account. It's going directly to units completed at the end of this period, because those were the first units in. They were there at the stroke of midnight. It's when the period started, and thus they're beginning WIP. And therefore they are the first ones out. First in, first out, that's FIFO. So yeah, we're going to back those out, those 50 units out of our otherwise what would be 980, back up here, 980. That's what you get from 900 plus 40% of 200. Back out 50 units of that from this beginning WIP back out right here, and you end up with 930 instead. For transferred in costs, we have again typical the same thing as we had for weighted average, and we back out 100% of the 100 units in beginning WIP, and we end up with 1,000 total equivalent units with respect to transferred in costs. If there are beginning WIP equivalent units, then it's always the case that the total equivalent unit figures for FIFO will be smaller than the total equivalent unit figures for weighted average. Now, it doesn't follow later that the rates are always lower for FIFO, but it can. But it always is the case, if assuming there are some beginning WIP equivalent units, that FIFO will be lower. And if there are no beginning WIP equivalent units, then the two are the same. I told you the only difference between these two methods is how they treat beginning WIP costs, and if beginning WIP costs are 0, the two methods work exactly the same. There's no difference. And then, of course, next video is going to start talking about weighted average rates and cost allocations. So that should be it for us here. We have now the ability to use our weighted average equation and then our modified FIFO equation down here for total equivalent units. And total equivalent units are important because they form the denominator for each of our rates to apply our costs this period into the credit side of our WIP account, the completed and transferred out units costs, and the ending WIP cost. And so that should be it for me for this video. Bye.